Good evening, students. Welcome to the session. Have you revised the last class? We started with the assessment. Along with you, I'll just quickly recap. Yes, have you revised it, students? Yes or no? Yes, good evening, Shankara. Good evening, Mansha. Mansha, for calculating the tax on the updated return, tax will be applicable of the current year in which we are furnishing the updated return. No, Mansha. So the tax always see whenever you file any return of income, you always file in the assessment year, right? Even let's say, for example, you are filing the return of income in response to the notice under 142. So even in that case, you are going to file the return of income in a particular assessment year when the scrutiny notice will be issued to you, right, Mansha? So that doesn't mean that you are going to apply the tax rate of that particular year. You're always going to apply the tax rate of the year in which you earn the income. Good evening, Prerna. Good evening, Sailesh. Good evening, Viraj. Good evening, Geeta. Okay. So what we discussed in the last class was we started with the assessment. We said that 143.1 talks about the processing of the return. It's a computerized processing which is called the summary assessment, where an intimation is sent to you. In that computerized processing, the arithmetical errors, the incorrect claims, any kind of losses or Chapter 60 deductions pertaining to the profit-linked deductions or 10W deductions if they are claimed after the due date of return of income, like under the return filed in under return filed belated or updated, or the disallowance of any expense or any addition to income which has been accounted in the TAR but has not been included in the return. So these kind of errors would be rectified, and after making the additions or disallowances, the total income and the tax payable or the amount refundable will be computed. So this has to be done within the 9 months from the end of the financial year in which the return is filed. So even if the scrutiny notice is issued, the processing of the return of income under 143.1 is mandatory. So the response assessee has to file whether it agrees, it disagrees, and after considering the response, the final intimation is sent, which is also considered as a notice of demand. There is no separate notice of demand issued. If there's any tax payable, there will not be any separate notice of demand which will be issued. This intimation will be considered as the notice of demand itself. Are we clear? Then we have something called as the e-verification scheme, which is one of the powers of the income tax authority under 133(6) to verify the information. So the income tax authorities or this computerized system basically will e-verify whether the financial information which is collected from the reporting entities under the statement for financial transaction file, along with the data that you have submitted in the return of income, and the notices will be sent to the assessee in case they have filed the return of income to consider providing the explanation that why there is discrepancies between the financial information file, for example, purchase of immobile property, purchase of shares, transactions in relation to the purchase of foreign exchange, so or the fixed deposits. These kind of transactions get reported in SFT. It is compared with the return. You are required to file the response or you are required to submit the updated return, right? And then if you want to file the updated return, you can do that before the assessment gets started. Now, the assessment starts with the issue of the show cause notice issued under section 143(2), asking you to show cause why the assessment should not be made on you. Now, here the AO, if he considers that there is understatement of income, there is excessive loss which is computed, or the taxes have been underpaid. Now, if he wants, he can issue the additional information under 142(1) to furnish any books of accounts or any other documents that he may require. For any other information, he can also issue a notice under 142(2). Now, there's no time limit to issue the 142(2) or 142(1) notice. This can be issued up till the date of completion of the assessment. Okay, so the completion of the assessment has to be done within the period of 12 months. And therefore, even these notices can be issued up to the 12 months from the relevant assessment year. Are we clear? In case the ROI has not been filed, the AO can issue a notice under 142(1) asking the assessee to furnish the ROI. In case you do not comply with 143(2) notice or under 142(1) notice, there will be penalty of 10,000. For 142(1), 142 notice, there could be also prosecution. And there could be the best judgment assessment being made under section 144 in case you do not comply with 143.2 notice or 142.1 and 142.2 notice. Then the AO also has the power to ask for the special audit being conducted by a chartered accountant, which is impaneled, and after the prior approval of the principal chief commissioner, chief commissioners of income tax, if there is nature and the complexity of the accounts as such, or there is doubt on the correctness of the transaction, or the accounts are voluminous or specialized nature of the business or in the interest of the revenue. Or you can also direct the valuation of inventory. Now, failure to comply with the directions of the AO may result in a penalty as well as the best judgment assessment being made on the assessee. The valuation of inventory has to be done by a cost accountant, again impaneled by the board. AO can also make a reference to the valuation officer to determine the fair market value of the investments, property, or any other asset. The valuation officer has to do it within the 6 months from the reference. And again, failure to cooperate with the valuation officer may result in a best judgment assessment. What is best judgment assessment? If there is failure to comply with show cause notice under 143.2, failure to comply with notice issued under 142.1, or failure to comply with the directions under 142.2a, which is special audit or valuation of inventory, or failure to file the return of income also. This can lead to AO making the best judgment assessment, passing the ex parte order after considering all the material that he has collected. And in this case, no refund shall be granted. Okay. Then, once the assessment is done, the order of the assessment shall be made under 143.3 or under 144. The time limit is provided under section 153. Where the updated return is not filed, it is 12 months from the relevant assessment year. In case the updated return is filed, it shall be 12 months from the financial year in which the updated return is furnished. In case the transfer pricing case is there where the reference is made to a transfer pricing officer, it will be 24 months, meaning an additional 12 months shall be granted. Then what are the powers of the income tax authority? We saw different powers of the income tax authority. Here, income tax authority meaning what? The AO meaning what? ACIT, DCIT, ADIT or DDIT. Now these AO will have the jurisdiction. Jurisdiction will be either where you are residing or where the principal place of business is there. In case there is a question of jurisdiction, it can be raised within 1 month from the date of service of notice under 143.2 or 142.1 where the ROI is filed. Where the ROI is not filed, then the time allowed under notice under 143.2 or 148 or 144, within that time you can raise the question of jurisdiction. Now, if you raise the question, the AO may agree to transfer the case to another AO, and they have to take the permission from the principal chief commissioner to transfer the jurisdiction. And once the case is transferred, new notice will not be issued. There is no requirement to reissue the notice. The proceedings will be carried out from the stage where the predecessor AO left it. However, assessee can demand the again opportunity of being heard before passing the order. Now, what are the powers with the income tax authority? Income tax authority function as the quasi-judicial authority, meaning they have all the powers of the civil court, which is discovery and production of the or an inspection, discovery and inspection, compelling the production of books of accounts or documents, issuing the commissions or summons, enforcing the attendance of a person and examining him on oath. They can also impound the books or retain the books of accounts for 15 days. After 15 days, they need to obtain the approval from commissioners or director under 131(3). They have the power to call for information. Now, these powers can be exercised even if no proceedings are pending. Even if no proceedings are pending. They have also the power to collect the information by visiting the place of business during the business hours. Now, this place may not be the principal place of business. And they have also the power to e-verify the information or to verify the information, which is the e-verification scheme. They have power to inspect the register of the company, and then they have the power of search and survey, which is what we are going to look at today. Okay. Good evening, Namrata. Shankara, yes, if an assessee is passed away, the family members can file even the updated return. Okay. Any other question? Okay, so let's proceed further. So today what we are going to start with is the 148, the reassessment. And then of course we'll move to the faceless assessment part also. But first we are going to talk about the reassessment. Now this is the assessment that you have looked at. This is the normal assessment that we have till now looked at it. There is quite a possibility that the assessment, even after the assessment has happened, there may have been certain points which may not have been identified at that point of time. Or the assessment would not have happened. Because if you see the time limit for issuing the 143.2 notice is 3 months from the end of the financial year in which the return is filed. There is a time limit for issuing the or for initiating the original assessment, the normal scrutiny proceedings as we may call it, which is 3 months. Now quite possible, and these days if you look at it, 3 months is a very short period of time, isn't it? 3 months is like a very, very short period of time given to the AO to initiate the assessment. So it's only 3 months which is given to them. So to study the return and then issue the notice, that 3 months time period is not very sufficient. So most of the time now you would see the normal scrutiny assessments are not happening. All the cases are being picked up only in the reassessment. Only in the reassessment. So now what is reassessment? We will try to understand that in detail. Now the reassessment is made under section 147. Is made under section 147 to 151. So if you now look at it, this entire scheme of reassessment has been amended by the Finance Act 2021. Erstwhile, it was a different scheme. Earlier, the cases of the search cases, for them, there was a separate scheme of assessment. Now, everything is brought under the same thing. The assessment is now made even for search cases either under 143, 144 or 147. So we have studied 143, we have studied 144, now we are moving to 147. So under income escaping assessment, if any income chargeable to tax in the case of an assessee has escaped assessment, Section 147 says, if any income chargeable to tax has escaped the assessment, then in that particular case, the reassessment shall be made on the assessee. The reassessment shall be made on the assessee. Now, how the reassessment will make? Let's try and understand one by one. First, we'll write section 147. Reassessment. So what does section 147 says? Each and every word is very, very important under 147. Let's try and understand one by one. So 147, as I told you, says that if for any assessee, any income chargeable to tax, if any income chargeable to tax has escaped assessment, then the assessing officer, subject to the provisions of 148 to 153, subject to provisions of section 148, 153, AO may assess or reassess such income. AO may assess or reassess such income or recompute the loss or recompute the loss or recompute the loss. So 147 is telling you what? That if any income chargeable to tax has escaped the assessment, then subject to section 148 to 153, the AO may assess or reassess the income or recompute the loss. Additionally, it says the AO may assess or reassess the income in respect of any issue which has escaped assessment and such issue comes to his notice subsequently in the course of proceedings. In the course of proceedings under this section. Irrespective of fact that provisions of section 148A have not been complied. Now, what does this mean? Let's try and understand. Let's say the reassessment was started for expense A, which is claimed as deduction. Let's say some additional depreciation on plant and machinery installed in office premises. Now the reassessment was started with respect to this particular point. So let's say expense A, which is additional depreciation on plant and machinery installed in office premises. Reassessment was initiated for this point. Now let's say during the course of the reassessment, it comes to the notice of the AO that there is another expense which is, the let's say any kind of expense which is donation. Let's say there is another expense B, donation to political party. Now, when the reassessment notice was issued, at that time, this particular expense was not identified by. So, section 147 says that the AO will not be restricted from making the addition for expense B. Then AO will not be restricted for making the addition for expense B. 147 says that the AO can assess or reassess the income in respect of any issue which has escaped assessment, and such issue comes to his notice subsequently in the course of proceedings, irrespective of the fact that this particular issue was not identified at the time of issuing the reassessment notice. Are we getting this point? So the AO can assess or reassess expense A as well as expense B, which is issue coming to his notice subsequently in the course of the proceedings under this section, irrespective of the fact that the provisions of 148A have not been complied with. Are we clear? So, but it should not happen, students. Let's say, for example, there are two expenses. So, you can write down first for this. Okay. Now, let's say, for example, students, that the expense A, for the expense A, let's say the AO drops the assessment for expense A, because let's say the assessee satisfies him that no, this plant and machinery is not for the office premises, this is in my factory, and the AO is satisfied. And now, after dropping the assessment for expense A, the AO does not proceed with expense A. The AO proceeds with expense B. So in that particular case, can the assessment survive? So the issue on which the original assessment was based, that issue is now no more being considered by A. The AO is proceeding with some other issue only. So in that case, the question arises whether the assessment can survive. What do you think? Yes? Whether the reassessment can survive in that case where the original issue is dropped. Yes. What do you think, students? Number, the income escaping assessment means the income has not been considered in the original assessment. Ansha, do you think it can survive? Yes. Anybody thinks it cannot survive? Yes or no? So if the addition is made on a different ground altogether, which was not considered earlier, when the reassessment notice was issued. So in that particular case, the question remains that whether the assessment notices can survive. So if the original ground is dropped and only the new ground is forming part, then there are two views. In the erstwhile reassessment scheme before 2021, which used to be there it was clearly held by the courts that no, the reassessment cannot survive if the original issue has been dropped. If the original reassessment issue has been dropped. But however, for the issue, if it is already being considered by the AO, and again some new issue comes to his light or comes to his notice, then in that particular case, the AO can proceed. The section clearly gives him the power to decide for the new issue as well. But where the original issue has itself been dropped, with which the reassessment was started, if that itself does not survive, students, then there are high doubts over the point that whether the reassessment can survive in that case. Are we getting that? Because the point here is my original issue with which the assessment was started, that itself is now not present. Now I am proceeding with some another issue only. Are we getting this point clearly? So the reassessment cannot survive in that case. Yes or no? Any questions so far? Yes. So if you look at the reassessment entirely has now been revamped. Earlier it was a very different scheme and there used to be different issues altogether for that. And to resolve those issues, this particular reassessment has been amended. Reassessment has been entirely amended after the 1st April 2021. Are we clear? Yes or no? Any questions, any doubts so far? So in case, as I said, if issue A itself is not proceeded with, if the issue A is not proceeded with, then there are high chances that only if you go with the issue B, the assessment will not survive. Yes? Any questions, students? So far, is it clear? Any doubts, any questions? Yes or no? Okay. Yes, students, are we clear about this? Okay, so let's proceed further. Tanesh, what you did not understand? What is your question, Tanesh? Yes. What is your question exactly? Okay. So basically, now 147 tells you that you can proceed with the reassessment in case of any other issue which comes to your notice, which comes to the notice of the AO subsequently. Are we clear? So now, how the reassessment is going to be happening? If you look at 147, 147 is giving you the point that it has to be, it is subject to be 148 to 153. 148 to 153. It has to be subject to that. So we will go into the procedure which is given under 148 to 153. Yes. So just let's get started with that. So first thing, section 148A. The reassessment will start with a show cause notice under section 148A. Now, what does section 148A tells? Let's try and understand. Mansha, reassessment can't survive on the original assessment. Original assessment is valid. Reassessment can be on different grounds. Yes, reassessment can be on entirely different grounds other than the original assessment. Namrata, can reassessment be done for the second issue, or will it stop at the point where original issue closes? As I said, if the original issue closes, then there are high doubts whether the reassessment in that case can be survived. There are very, very high doubts regarding that. It is possible that it may not survive because there have been conflicting decisions of the courts on this particular point. Clear, Namrata? Yes. So there has been a judicial conflict on AO's ability to make additions on new issue if no new additions were made on the primary issue. And this was the judicial conflict even there in the old 148 or 147. Are we clear? So there were favorable rulings also, there were against rulings as well on this particular point. Yes or no, Mancha? Namrata, clear? Okay. Any other questions, students? Yes. Okay. Okay. So let's proceed further. So see, students. Yes, in case the new issue, in case the old issue survives, then of course the new issue on that we can have the reassessment being done. That is the thing which is coming under the 147 itself. Clear? And yes, Namrata, there have been several ITAT rulings also, the tribunal ruling also, which says that the reassessment based on the additional issue is invalid on the deletion of the original issue. Because the original issue, if it does not survive, the new issue will also not survive. So there have been, as I said, quite a lot of conflicting ruling on this particular point, Namrata. Yes. Okay. So now the first thing is, Namrata, see, this is just the point for your understanding. This will not come in examination. If it comes in examination, you can just write that there are conflicting rulings on this particular point. Because this is subject to a lot of conflicting rulings, so this should not come in the examination. Only the settled principles which are settled by either the High Court judgment, since here there are conflicting High Court judgment, here there is a possibility that this will not come in examination. Only the settled things come as a part of the examination because this is something which has not been settled. Clear? Okay. Yes or no? Okay. Now, let's try and understand how the reassessment functions. So first it is started with the issue of notice under section 148A. Now what does section 148A says? What is the issue of notice? So just like in the normal assessment, in the normal scrutiny proceedings, your scrutiny starts with, your assessment starts with issue of show cause notice under 143(2). Here, the reassessment will start with issue of show cause notice under 148 148A. So under 148A, the show cause notice will get issued. So AO, you can write down over here, the AO, if the AO has under 148A any information in his possession suggesting that the income has escaped assessment. So the AO has to do the following steps. First, the AO will conduct an inquiry. The AO will conduct the inquiry with the prior approval of the specified authority. With of the specified authority with respect to the information which suggests that the income chargeable to tax has escaped assessment. With respect to information which suggests that income chargeable to tax has escaped assessment. So the first thing that the AO will do is, before issuing the notice, he will conduct an inquiry with respect to the information that suggests that the income chargeable to tax has escaped assessment. Now, if you look at it, the AO cannot, on just any reason to believe, like AO cannot, for any reason to suspect that the income chargeable to tax would have escaped assessment. He cannot do it on the mere whims and fancies. Are we getting this point? So the AO should conduct a thorough inquiry to identify if the income chargeable to tax has escaped assessment in a genuine manner. It should not be just based on his whims and fancies that, okay, he may feel that, okay, there is a reason to suspect that this assessee may have evaded some taxes or this income would have escaped assessment. And therefore, we'll just issue the notice under 148. If this is done, what will happen? In every case, the AO will start issuing the notices. Isn't it? So, there is a possibility that your assessment was not done, your scrutiny assessment was not done, and therefore the income has escaped assessment. But for that, the AO has to have the inquiry conducted properly. The AO should have conducted the inquiry properly. Are we getting that point? So without that inquiry, without conducting that inquiry, it cannot be said that just based on his whims and fancies that, okay, the assessment we can start away with. Yes. So the first step is that the AO needs to conduct the inquiry to see that if the income chargeable to tax has impact escape assessment. And if required, he has to obtain a prior approval of the specified authority. Now you may say, what information will suggest that the income chargeable to tax has escaped assessment? What information are we talking about? Because what I have written over here is, I have written over here that the AO to conduct the inquiry, if required with the prior approval of the specified authority, with respect to the information. With respect to the information which suggests that income chargeable to tax has escaped assessment. Now, where will this AO get this information from? Yes. Where will the AO get this information? What do you think? Yes. So, the information for the purpose of section 148A, an explanation to section 148 provides that the information with the AO means, so you can write it over here. Information with AO means any information in the case of assessee in accordance with the risk management strategy. In accordance with the risk management strategy. Now you will ask, ma'am, what is this risk management strategy? So, sorry, this risk management strategy which is there, I'm so sorry. This is formulated by the CBDT. Sorry. This risk management strategy which is there, this is formulated by CBDT. Yes, Thinesh, you are right. Based on AIR, SFT, AIS, TIS. So AIR and SFT is one and the same thing, Thinesh. SFT is basically the statement of financial transaction, which is also called as annual information report. It's the same thing. And sorry, student, I have really bad cold today. So this information which is collected in the AIR or SFT gets reflected in your AIS or TIS. So AIS or TIS is not something different. Whatever information is collected in your SFT is getting reflected in your AIS or TIS. So you're absolutely correct, Thinesh, that the risk management strategy which has been formulated by the CBDT Now, they are collecting the information from all the reporting entities under the statement of financial transaction, which we already discussed in the first lecture that we started with the assessment proceedings, right? So this e-verification information, that's e-campaign notices that your clients are getting, this particular information constitutes the risk. And based on this information, the notices can very well be issued. This constitutes the information for the AO to issue the notice. Are we getting that? Yes, Namrata, AIS TIS. So AIS TIS is your statement, but the AO gets the information through the SFTs, which is also reflected in your AIS. So this e-campaign notice is the first step. The e-verification of information is the first step to give you the opportunity to explain why you have not considered this as a part of your income. And once you've submit the information, then if the AO is not satisfied with which is most likely he will not be, because when you try to reply to these e-campaign notices, there are standard responses which they have set in. You have to select from one of those. You cannot reply in detail. So basically, the AO will have this information, and this information constitutes the information based on the risk management strategy. And this could be the reason for reopening the assessment. Are we clear? Yes or no? This is the first one. The second one is the information. Just write down. Any audit objection to the effect that the assessment in the case of assessee has not been made in accordance with the provisions of this Act. Are we clear? So now what does this mean? So the Income Tax Department also audits its own assessments, which have been done by the AO. Now it is quite possible that the AO, who would have done the normal scrutiny proceedings, would have not done the assessment properly. And the audit information, the audits when they are done, whether the AOs have done the assessment properly or not, may reveal that the assessment has not been done properly. So this audit objection can also constitute the information for reopening the assessment. Number 3. Information received under the DTAA or exchange of information agreements. So if the income tax, as I told you last time also, that the India has signed DTAAs or tax information exchange agreements with many countries, and it shares the information on regular basis with the different countries. And it also receives the information with its about its own residents under the DTAA or TIES. So if the information is received under that, this may also constitute the information for the reopening of assessment. Next is information collected by the AO. Information collected by the AO under section 133 or 133B or 133C or 134. So we saw while we were seeing the powers of the income tax authority that they can collect the information, they can verify the information. So this information that they are collecting can also be used against the assessee. Last one. Information which requires action in consequence of order of tribunal or court. Are we clear? Yes or no? Any questions so far? So this is the information which may be with the AO. This is the information which may be with the AO. Are we clear? So basically, if this information is with the AO is in possession of this information, which is suggesting that the income has escaped assessment. So if this information suggesting income escaping assessment, then the AO has to conduct the inquiry. He just doesn't have to rely on this information. He has to conduct an inquiry independently to verify this information. So this inquiry, with respect to this inquiry, the AO has to first conduct the inquiry. Are we clear? Now, there will be also a case where search is initiated. Under section 132, where the search is initiated under 132 or books of accounts or documents or the assets are requisitioned under 132A, where survey is conducted under section 133A or AO is satisfied with prior approval of, with the prior approval of Principal Commissioner of Income Tax or the Commissioner of Income Tax, that any money, bullion, jewelry, or valuable article or the thing seized or requisitioned under 132 or 132A belongs to assessee. The AO is satisfied, or the AO is satisfied with prior approval of PCIT or CIT that books of account, documents seized or requisitioned seized or requisition seized or requisition under 132 or 132A pertains to or relate to the assessee. So in these cases, the AO shall be deemed to have information AO deemed to have information which suggests that income chargeable to tax has escaped assessment. Has escaped assessment. Are we clear? So here, basically, if you look at it, what they are trying to say, in case where the information is in accordance with risk management strategy or audit objection or received under DTAA or collected by the AO himself under 133, 133B, 133C or 134, or information which requires action in consequence of the order of tribunal or court, then this will suggest that the income has escaped assessment. And when the search is initiated under 132 or survey is conducted under 133A, or the AO is satisfied that any valuable article or money bullion is belonging to assessee or any books of accounts are pertaining to assessee. In that case, this will be deemed to be an information which suggests that income chargeable to tax has escaped assessment. Okay. Mansha, all power under 131 to 136 are using to conduct inquiry before sending notice for section 147. Not necessary, Mansha. That is not at all necessary. So that is not necessary. Okay. So it may be, as I told you, that even if the proceeding is not pending, now this may not be for my own assessment that this information is collected. This information can be collected for some other assessee also, whose assessment was ongoing. So this is not something that the information is collected for my own assessment. Clear, Mancha? Yes or no? Okay. So once this information is collected, as I said, the AO has to make an inquiry under 148A. However, in these cases of deemed information, 148A is not applicable. So the procedure is not to be followed in case of deemed information under 148A. Where the search is conducted, where the survey is conducted, where the AO is satisfied with the prior approval that the books of accounts are relating to this person or the money is belonging to this person. Are we clear? So where search is initiated, where the information is relating to this assessee or the money, bullion, jewelry or valuable article is belonging to the assessee, or where the AO himself has collected the information under 133, A, 133, 133B, C, 134. In these cases, the procedure under 148A need not be followed. Are we clear? So the procedure under 148A need not be followed in the cases where this is there. Except in the case of survey. In the case of survey, the 148A is still to be followed. You can write here, except in case of survey. Okay. Further, section 148A, or you can write it over here itself. Section 148A, procedure not to be followed. Only in respect of this point. Okay. So first procedure under 148A is to conduct the inquiry. Second, provide opportunity to assessee, provide opportunity of being heard to assessee. Provide opportunity of being heard to assessee. Okay. So how the opportunity of being heard to assessee will be given? This will be done by issuing the show cause notice, by serving him the show cause notice. By serving him show cause notice, which the timeline for which shall be between 7 days to 30 days from the date on which the notice is issued. Now this show cause notice will be for what? This show cause notice will be as to why the reassessment should not be made on you. show us the cause as to why we should not issue you a notice under 148, because we have the information which suggests that the income chargeable to tax has escaped the assessment. Are we clear? Show cause as to why notice under section 148 should not be issued on the basis of information which suggests that income chargeable to tax has escaped assessment. Are we clear? Income chargeable to tax has escaped the assessment. Clear? So the time limit for this is 7 days to 30 days. Yes. So first, the AO will conduct the inquiry, then issue a show cause notice on the assessee for granting him the opportunity as to why we should not proceed with the reassessment. Why we should not proceed with the reassessment by issuing a notice under 148. This is what we are talking about, is 148A, wherein the inquiry has been conducted. So in this show cause notice, the results of inquiry will also be provided. The AO will provide him that this is the information which suggests that your income has escaped assessment. And considering the reply furnished, if any, by the assessee, considering the reply furnished by the assessee, decide on the basis of material available on record including the assessee's reply, whether or not it is a fit case to issue a notice under 148. Under 140. And accordingly pass an order. So once this is done, then the AO will pass the order under section 148A clause D. What is the time limit for passing the order? This has to be with prior approval of specified authority, and the time limit is going to be 1 month time limit is if reply furnished by assessee to the show cause notice, the time limit is going to be 1 month from the end of the month in which reply is received. If reply is not furnished, then it shall be 1 month from the month in which the time for reply expires. Okay. So with this, the order will be passed by the AO. Yes, are we clear? Yes, thank you, Namrata. Yes or no? So 148A is the first step for initiating the reassessment. Is the first step for initiating the reassessment. Yes or no? So first, the AO has the information. What information? The information regarding the risk management strategy. Secondly, information based on some audit objection. Third, information under the DTAA or tax information exchange agreements. Fourth, based on some action required against the court order or a search or survey conducted or information collected by the AO himself under 133, 133B, C, 134. Or the books of accounts relate to the assessee or bullion, gold, jewelry belongs to the assessee. Based on that, if this information, the reassessment can be conducted. Under 148A, first step, the AO will conduct inquiry regarding this information. Now, 148A is not applicable in case of search, in case the books of accounts or gold, bullion, jewelry is found where the information relates that this belongs to this assessee, or in the case where information is collected by the AO himself under 133B, C and 134. In those cases, 148A is not applicable, meaning no inquiry needs to be conducted. Because the AO himself has obtained this information. He has gone for the search himself. He has collected this information himself. So this is going to be true. Therefore, the inquiry need not be conducted once again. And this information is collected from the assessee himself. So therefore, no notice again required for show cause also. No show cause notice also required. Now, once the inquiry is conducted, he needs to issue a show cause notice under 148A. As to show cause, why we should not do the reassessment by issuing you a notice under 148. Since we have this information suggesting that the income chargeable to tax has escaped assessment. Assessee to file the reply within 7 to 30 days as the time which is given to him. Based on the reply of the assessee and based on the material available on record, the AO will pass the order under 148A within 1 month from the reply or within 1 month from the expiry of time limit, whether it's a fit case to proceed with the reassessment or to drop the reassessment. Yes, Mansha, this reassessment is same for all the assessee. Yes or no? Any questions so far? Yes, students, any questions so far? Yes? Now, once the order is passed, let's say the order is passed, saying that the reassessment should be made on the assessee. Then a notice is required to be issued. A notice is required to be issued to the assessee under 148. So the next step is notice under section 148. Now, what is this notice? This particular notice is issued initiating the reassessment. This notice begins the reassessment. So 148A notice which is there, that is to decide, that is an opportunity that the AO gives to assessee to give us a response to satisfy us that the reassessment should not be made on you. If the AO gets satisfied, the reassessment may be dropped, which is like a 0.001% chance. But most likely, the AO will not be satisfied. Then he will issue a notice under 148. Under 148. Now, this notice is issued along with the order of 148A. So, the AO will serve this notice along with the order of 148A. Both will come together to you in the email. Now, what does this notice will tell you? This notice these are issued together. This notice will require you to furnish a return of income. Requiring the assessee to furnish the return of income within maximum 3 months from the end of the month in which the notice is issued. Are we clear? So this 148 works like 142.1 under the original assessment, under the normal scrutiny, where the AO requires you to furnish return. But there's a difference. Under 142.1, only when you have not filed the ROI, the AO will require you to furnish the return by issuing a 142.1 notice. Here, even if you have furnished the ROI, belated, updated, revised, original, whatever, you have to again furnish the ROI in response to 148. It is mandatory. So, under 142.1, under the normal scrutiny, you are required to file the ROI. The AO is required to issue you a notice under 142.1 only if you have not filed the ROI. Here, you are mandatorily required to, here the AO is mandatorily required to issue notice under 148 to furnish the ROI even if the assessee would have filed the ROI. So here you are required to file the ROI again. Are we clear? So 148 will require the assessee to furnish the ROI. Are we clear? So this is the third step after the 148A order has been passed. Yes. So the first thing is 148A. Now 148A does not apply in case of search, in case of the information or books of accounts or bullion jewelry belonging to assessee, in case of information collected by the AO himself. Are we clear? Yes or no? Any questions so far? Any doubts so far? Yes, students? And then you have the order under 148A and then you have the notice under 148 which is issued by the AO along with the copy of the order under 148A requiring him to furnish a return of income. Yes? Yes or no? Any questions? Any doubt? Any question? What is the difference between 148A and previous section? Which previous section you are referring to, Namrata? Do you mean 148? Yes. So this return, which is filed under 148, will be deemed to be a return filed under 139. Will be deemed to be a return filed under 139. However, if the return is furnished after 3 months' time, it will not be considered as a return filed under 139. It will not be considered as a return filed under 139 if it is furnished after 148 period, which is 3 months. Yes, Mansha, I will explain once again. 148. Yes. Okay. So what I was saying is, first you will have to conduct, first the AO has the information. Which information? As I said, the information of any assessee in accordance with risk management strategy, any audit objection, information received under DTAA, information collected by AO under 133, 133B, C, 134, information which requires actions in consequence of order of tribunal or court. In these cases, the inquiry needs to be conducted except for information collected by AO under 133, 133B, C, 134. In case of the deemed information, where the search is conducted under 132, where survey is conducted, where AO is satisfied that money jewelry belongs to the assessee or the books of accounts relates to the assessee, in these cases, except for survey, the 148A procedure need not be followed. This will be deemed to be information which suggests that income chargeable to tax has escaped assessment. Now, once the AO has conducted inquiry in respect to the above information, except the information collected by the AO, he will issue a show cause notice asking the assessee why the reassessment should not be made by issuing a notice under 148. Assessee has to file reply within 7 to 30 days as may be allowed, and based on the assessee's reply, based on the material available, the AO will decide whether it is a fit case to proceed with the reassessment. And accordingly, he will pass the order after obtaining the prior approval of specified authority, the time limit for which is within 1 month from the reply furnished by the assessee or within 1 month when the time limit for reply expires. And along with that, issue a notice under 148 requiring the assessee to furnish the ROI. Now, this notice is required to be issued mandatorily even if the assessee has already filed the ROI. Assessee needs to file the ROI again within the 3 months from the notice is issued. Yes, are we clear? Any doubt? Any question? Yes or no? Now, what is the time limit for issuing the notice under 148? The time limit for notice under 148 is given under section 149. The time limit is given under 149. There are two time limits. One is 3 years from relevant assessment year. So within 3 years from the relevant assessment year, the notice under 148 can be issued, meaning the reassessment can be made for a period of 3 years prior. So the reassessment notice can be made even after 3 years from the end of the relevant assessment year. Second is 10 years from the relevant assessment year. So the reassessment can be made up to 10 years if the AO has in his possession books of accounts or documents or evidence revealing that income chargeable to tax is represented in the form of is represented in the form of any asset, expenditure, any entry in the books of accounts, which is likely to exceed rupees 50 lakh. Likely to be greater than equal to 50 lakh. Okay. So basically, the reassessment notice can be issued. The reassessment notice can be issued within 3 years from the relevant assessment year. We are looking at assessment year 24-25. So for assessment year 24-25, the reassessment can be made up till assessment year 27-28. And in case the income is represented by any asset, expenditure, or any entry in books of account where it is likely to exceed rupees 50 lakh, then it can be made even up till 10 assessment years. So meaning it can be made till financial year, assessment year 34-35. Are we getting it? So from 24-25, 10 years, 25-26, 26-27, 27-28, 28-29, 29-30, 30-31, 31-32, 32-33, 33-34, 34-35. Up till these years, the assessment can easily be made at any point of time. This is the time limit for the reissue of reassessment which has been provided. Are we clear? Yes or no? Any questions? Any doubt? Yes, students? Yes? Yes or no? Any questions? Any doubt? Okay. So let's take a small break over here and we'll continue after that. Let's take a break of 10 minutes over here. Mansha, 3 years from the end of the relevant assessment year, notice can be till financial year ended 31st March 2028. Yes, you're right. It's financial year and not assessment year. This is previous year. In fact, this is also previous year. Yes, Mansha, you're correct. Okay, students. Now, this is about 148 notice, the time limits of which are given under 149. Okay. Now, there are certain other issues that I would like to talk about under 148 and 149. Okay. So, let's discuss that one by one. Now, as I said, that this notice under 148 requires the assessee to furnish the return of income. Will require the assessee to furnish the return of income. Now, in this particular case, again, if we recap, first we have 148A. Now, 148A requires the approval of the specified authority when the order is passed. And even to issue the notice under 148A. Because it should not happen that the notices are issued rampantly by the assessing officer. Are we clear? So, in case of 148A, if you saw, there was that point that the inquiry needs to be conducted after the approval from the specified authority. So, who is the specified authority? Who is the specified authority? That is given by, again, section 149. Who is a specified authority? For the purpose of approval under 148A. So, the specified authority is, just write down, for the sanction for issue of notice, where the notice is to be issued within 3 years, where the 148 notice has to be issued within 3 years, then the specified authority is in this case is Principal Commissioner or Principal Director of Income Tax or Commissioner of Income Tax or Director of Income Tax. And where the notice has to be issued within 10 years, then the specified authority will be Principal Chief Commissioner of Income Tax or Chief Commissioner of Income Tax or Principal DGIT, Director General of Income Tax or DGIT. Are we clear? So in the cases, as I said, under 148A, the assessing officer has to conduct an inquiry after obtaining the approval from the specified authority. This specified authority are these authorities. And then, even when the order is passed, even when the order is passed under 148A, there also the specified authority's approval is required to pass the order. Are we getting this particular point? And even for issuing the notice under 148, the AO cannot issue the notice also under 148 without obtaining the prior approval of the specified authority. So you can write down notice cannot be issued under section 148 unless there is information with AO suggesting that income chargeable to tax has escaped the assessment. Prior approval from specified authority is obtained. Okay, prior approval is obtained from the specified authority. Okay. Yes or no? However, the approval will not be required to issue a 148 notice where already the approval has been obtained for order under 148. When 148 is issued, the 148A which is issued, for that also the prior approval is required. In case the approval is not obtained for that, then you need to obtain for issuing 148. But for issuing 148A order also the approval is required. So quite a possibility that the AO may have lapsed on obtaining the approval before passing the order under 148A. But if the order is passed after the approval of specified authority, then again the approval will not be required for 148. No approval required if approval from specified authority obtained for passing order under section 148A. So if my order, what is my order under 148A? Order will decide that whether it is a fit case to issue 148. Now, if the order is with the specified authority's approval, then I again need not obtain the approval from the specified authority for again issuing 148. Mansha, no chance to get reassessment notice after 10 years. So the latest time limit, maximum time limit for issuing the notice is 10 years, not beyond. Clear, Mansha? Okay. Now, understand one more thing. Now, in cases where there is this 148 has to be issued, where the reassessment is to be done. Now, what will be my relevant assessment here? What will be my relevant assessment here? It says 3 years from relevant assessment here, 10 years from relevant assessment here. So what is the relevant assessment here? What is a relevant assessment here? So relevant assessment here is the year for which there is information in accordance with the risk management strategy, in accordance with the objection, in accordance with the information received under DTL, or information collected by the income tax officer, or information requiring action against the order of the tribunal or court. That is my relevant assessment here. So when I say 3 years from the relevant assessment here, these are the assessment here from where the information is contained is being obtained, for which the information is obtained. That is my relevant assessment here. However, Where a search or survey has been conducted, or books of accounts or valuable articles are found, then in that case, my relevant assessment here can be more than one. Are you getting that? So where search is conducted or survey is conducted, I can get information for many years. So the relevant assessment here will be any assessment here which is not barred by the time limitation under 149. Are you getting this particular point, students? So under the search or survey options, it is possible when the search is conducted, there can be multiple years which may be found out where it is possible that the income would have evaded the taxes. The assessing officer may get in his documents many years information under the search and survey operations. So in those cases, for the search survey operation, the assessing officer can reopen the assessment for all those assessment years unless the time limit for those years have not expired under 149. Unless the time limit for those would have not expired under 149. Are we clear? So basically, the section 149 says that notwithstanding anything contained in section 149 subsection 1, where the information relates to multiple years, then all those will be my relevant assessment years, unless the time limit has not expired. So in case, if we look at it, even in this cases, year, where the time limit is 10 years, section 149, subsection 1A says that notwithstanding anything contained in subsection 1, which says 3 years or 10 years from the relevant assessment year, where the income is represented in the form of any asset, expenditure, right, or entry in the books of accounts, which has escaped assessment. And this investment in the asset or expenditure has been made or incurred in more than one previous years, then a notice under 148 shall be made for each assessment year. Then the notice shall be made for each assessment year. So just write down. In case asset or expense relates to more than one previous year, then notice required for each previous year. Then the notice is required for each previous year. Yes or no? Any questions? Any doubt? Yes, students? Any questions or any doubt? Yes? Okay. Now let's proceed further. Now in the cases where these money, bullion, jewelry are belonging to assessee, where the search operations have been conducted, or where the books of accounts or documents relate to the assessee. In these cases, as I said, 148A will not be applicable. 148A will not be applicable. 148A will not be applicable at all. Yes or no? So in these cases, the 148A will not be complied. Directly, you will get notice under 148. Directly, you will get notice under 148 for these cases. Yes? Yes or no? Any questions? Any doubt? Yes? Okay. Now, understand the time limit. There are few more issues. Now here, the provision says is where the search is initiated. Where a search is initiated after 15th of March of a financial year. Now, if search is initiated after 15th of March of the financial year, and in the case where the survey has been conducted under 133 before the 31st of March of the financial year, where a search is initiated after the 15th of March of the financial year, or where the information is collected under the survey before the 31st March of a financial year. And the period for issue of notice under 148 expires on 31st of March. Are we getting this particular point? So the search has been initiated after 15th of March. And the time limit for that year is expiring on 31st March. Or a survey has been conducted. Or the survey has been conducted in consequence of a search initiated after the 15th of March. And again, the period of notice is going to be expiring by 31st of March to issue the notice. See, you have to count the 3 years or 10 years from the end of the relevant assessment year. Right? You have to count the 3 years or 10 years from relevant assessment year, not from when the search is conducted. Now, quite possible search is conducted after 15th of March. Right? And the period of notice is going to expire on 31st of March. Or in a case where the information is collected. So in this particular case, the 15 days shall be excluded for the purpose of computing the period of limitation. So the period will be extended by another 15 days. Basically, that's what they are trying to say. So in case a search has been conducted or a survey has been conducted, then in that particular case, a period of 15 days, if it is only left, then for the purpose of computing the period of limitation, those 15 days will get excluded, meaning the period of limitation will now be extended by another 15 days. Are you getting this particular point? So just write down. If search or survey conducted by after 15th of March and time limit for issue of notice expiring on 31st of March. In this particular case, the time limit shall be extended those 15 days shall be excluded. Okay? Another situation. Now, as I said, the notice has to be issued under 148A. Notice has to be issued under 148A for all other cases. Now, many of my clients, I can give you one example. In one of my client, the notice was issued on 21st of March. And obviously, the 3 years were going to lapse on 31st of March. The 3 years were going to lapse on 31st of March. He was given, let's say, 15 days to reply. Now the notice has to be mandatorily issued for the client or for the taxpayer under 148A before 148 can be initiated. Isn't it? So the question which arises, that is that notice issued under 148 valid? Is that notice valid? That is the question. Are you getting this particular point? So the notice under 148A was issued to him on, let's say, 21st of March, and let's say the time limit for the notice under 148 was expiring on 31st of March, the 3-year window. Can the notice be issued to him under 148 then? That is my question to you. Yes. What do you think, students? Yes, students, faster. What do you think? Are you getting the particular issue which is there? The notice which was issued to him under 148A was issued on 21st March. Yes, I'm not getting any answers. What example, Mansha, should I give you? Extend time limit of 15 days, Mansha. Yes, that you are correct. Absolutely. You're absolutely right. So here, if you look at it, though the time limit is going to expire, now in this particular case, since the notice was issued to him under 148A, the notice was issued to him on 21st March, and on 31st his time limit for 148 is expiring, and he has got time limit to reply till 15th of, let's say, till 5th of April. So in that particular case, obviously the notice under 148 could not have been issued until 31st of March. So the notice does not become invalid, students. Notice does not become invalid. The notice is still valid because the 149 says, section 149 says that the time limit which is given for replying to the notice will be excluded from the period of limitation. The time limit which is given under 148 will exclude the time limit which is there for replying to the notice. Yes or no? So just write down over here. So, where after excluding, what does the act says? After excluding the period or you can just write like this. If the period of limitation available to AO for passing the order under section 148A is less than 7 days. Then the period shall be extended to 7 days. Because only after passing the order under 148A, you will be able to issue the notice under 148. And for the purposes of computing the period of limitation, the time allowed to assessee, as per the show cause notice shall be excluded. To reply to show cause notice under section 148A shall be excluded. So for computing the period of limitation, the time allowed to the assessee to respond to show cause notice under 148A shall be excluded. And where after excluding that period, the time available to pass an order under 148A is less than 7 days, then the period shall be extended by 7 days. Okay. This is after excluding. Okay. Yes or no, students? Fine. Is this very much clear? Sorry. Okay. Yes or no? So in case of search, let's say for example, if the search is conducted on, let's say 20th of March, then the AO is deemed to have the information for that particular AY for which, let's say, he has found the information during the search. Now, let's say for example, he can issue the notice on 31st of March for which particular AY? For 3 years. He can issue it for 3 years, the notice for 3 years, right? Which is 21-22, 22-23 and 23-24, the current year as well as 2021. So 3 prior years as well as the current year. Let's say a search is conducted on 20th March 2024. Then for the current year, if the information is available, so for this year, he can issue the notice, and for the last 3 years, right? For the last 3 years, it will be 2021, 21-22, 22-23. He can issue by 31st March 2024, right? Now for AY 2021, okay, in the case of search, let's say search conducted on, so for which AYs he can issue the notice? For AY 2021, 21-22, 22-23, right? These 3 AYs he can issue by 31st March 2024. Now, the AY 2021 notice which is there, the AY 2021 notice which is there, and of course 23-24. What will be the time limit for this? The time limit for this will be 22-23, 23-24, and 21-22, 22-23, and 23-24. For this, the time limit is expiring on 31st March 24. Right? The time limit is expiring on 31st March 24. Now, assessing officer has only 12 days. So, for this, only 12 days left to issue 148 notice. So, only 12 days are left to issue the notice under 148. So, therefore, what does 149 says? Where a search has been initiated after 15th of March for a year, for which the time limit is expiring on 31st of March, then 15 days shall be excluded for the purpose of computing the limitation period. So for AY 2021, the notice can be issued extend by 15 days. So notice issued by 31st, 15 April 24. Are we clear? And the notice will be deemed to be issued on 31st March 24. Yes or no? Is this search point clear? Yes, Manish, I explained with the example itself. Yes, Mansha, you need to revise it very clearly. Yes, Mansha, 148 not applicable for 132. It is directly 148 which will get issued, not 148A. Is this example clear, Manish? Yes or no? Yes? Okay. Similarly, as I told you, even in the case where the 148A notices are issued, where the time limit which is given to you, is to be excluded. The time limit to reply to that notice. The time limit to reply to that notice have to be excluded. Are we clear? So, the 148A time limit which is given to the assessee to reply, 7 to 30 days they give to reply to the assessee. that time has to be excluded for computing the period of limitation. Are you getting that particular point again? Now, if after giving that time, after excluding that period, again, during which the assessee has to reply, if the time available is less than 7 days, if the time available is less than 7 days, then the period shall be extended by the 7 days window. Are we clear? So I'll give you one example. I'll show you. This was in one of our assessee. See how we do it exactly. I'll show you. Let me just share the screen. See, this will help you understand practically this point. This is how we prepare a checklist practically. So that even if there is one procedural lab student, you have to attack on that during the assessment. I'll tell you one provision, 292BB. If in case of lapse, you cooperate without raising that objection at the assessment stage, without raising the objection for any procedural lapse, you cannot raise that objection later on. What is that section? Section 292BB. So section 292B, if you remember that day I told you that in case there are some grammatical, arithmetical errors, which does not result, or typographical error, which does not result in violation of the law, then the income tax officers have to accept the return of income and the assessee should accept the notices or assessment orders. But section 292BB says that where the assessee has appeared in any proceedings or has cooperated in any assessment proceedings or reassessment proceedings, and he has not raised any objection that the notice was not served on him, or the notice was not served on him on time, or was not served on him in a proper manner, and he has cooperated in the entire assessment proceeding, then it will be deemed that the notice has been duly served upon him and he will be precluded from taking any objection later on. But if he raises this objection before the completion of assessment or reassessment, then he can challenge the notice. But during the assessment, if you do not challenge the irregularities in the notice, later on you cannot. Later on, you will be precluded from challenging at the appeal stage. So you have to be very clear in terms of these kind of checklists you need to prepare for these kind of assessment notices so that there are no procedural lapses. So in case if you see here, the date of issue of notice under 148A was 27th March 2022. This is for the assessment year 18-19. So for 19, when the time limit was expiring? 2021. 22, sorry, 1920, 2021, 21-22. On 31st March 2022, time limit for 148 was expiring. And we were given only 7 days to reply, or maybe 5 days to reply. Now the date of passing the order, if you look at it, is 11th April 2022. The date of passing the order was 11th April 2022. So in this case, even after excluding the time to reply, we extended the time by 7 days, which was falling on 7th of April. But the notice was issued on 11th of April. The notice was issued on 11th of April. So in this particular case, the notice was not validly issued. The notice was not validly issued. Are you getting this particular point? So we were given the time to reply only till, let's say, 31st of March. Are you getting this particular point? And what does the law say? That you exclude that time. You exclude that time which is given to you to reply. And after considering, if after excluding the time to reply, the period available for passing the order under 148A is less than 7 days, then extend the time period by another 7 days. But here, even after considering the time, even after excluding the time to reply, the time which was available, was extended by another 7 days, but still it was beyond the period of limitation. Are you clear, students? Yes or no? Yes, okay, students, perfect. Yes, okay. So let's go back. Now, another last point in 149 notice. What is that point? Now, this is very, very important, students. Be very careful over here. So, I told you that there was a different scheme of reassessment prior to Finance Act 2021. So, now we have a time limit of 3 years and 10 years. Earlier, there used to be a time limit of 6 years. Earlier, there used to be a time limit of 6 years, not 10 years. We have a 10-year window now. Now, understand this fact. Now, this particular new reassessment scheme has come in Finance Act 2021, which was applicable from 1st April 2021. Now, it is quite possible that from 1st April 2021, the time limit has increased from earlier 6 years to now 10 years. So the AOs started issuing the notices for the earlier periods as well, even where in the earlier period, in the earlier reassessment scheme before 2021, the 6 years window had expired. But now, since they have a 10-year window, they started issuing the notices. So what section 148 says that? Oh, sorry, 149 says that. Section 149 says, if, or it says, no notice under section 148 shall be issued at any time. No notice under 148 shall be issued at any time if a notice under 148 could not have been issued at that time. So this is for relevant assessment years prior to 31st March 21. If no notice under 148 shall be issued at any time if notice under 148 could not have been issued at that time due to expiry of time limit. Due to the expiry of the time limit. So for the relevant assessment year prior to 31st March 2021, notice cannot be issued under 148 if the time limit of theirs have already expired. Now let's try and understand. Let's say AY 1819, AY 1920. Now this, as I said, or let's take it like this. This amendment has come in, let's say, from AY 22 or from it's applicable from 1st April 21. 1st April 21. Right? So the 31st March 2022 will be the first assessment year. Now, if you look at, let's say, AY 1314. Let's say we'll start from AY 1314. AY 1415. 1516. 1617. 1718. 1819. 1920. 2021. 21, 22. 22, 23. Okay. Now in this particular case, you tell me whether the assessment can be issued for all these years. So in this case, if you look at 1314, when will the 6 years expire for 1314? 14, 15, 15, 16, 16, 17, 17, 18, sorry, 14, 15, 15, 16, 16, 17, 17, 18, 18, 19, 19, 20. So for this, 6 years have already expired. So whether 148 can be issued? Answer is no. So although for 23-24 or 22-23, this could have been issued for AY 1314 because this is a 10-year time limit. So on 31st March 2022, I could have gone for back to 10 years. Right? So ideally the 10 years for 1314 will expire on 1314, 14, 15, 15, 16, 16, 17, 17, 18, 18, 19, 19, 20, 20, 21, 21, 22, 22, 23, 23, 24. The 10 limits will expire on 23, 24. But since the 6 years have already expired, as on the date, I cannot issue the notice. Similarly, for 14, 15, it will expire in 2021. So I cannot issue a notice. But for 15, 16 students, this will expire in 21, 22. So for this, I can issue the notice under 148. Are we clear? So for this, I can issue the notice under 148 if there is the asset, expense or any entry which represents that more than 50 lakhs is likely to be escaped, then I can issue the notice for 10-year period. Otherwise, if it is not there, then I cannot issue even for these years because the 3 years also have expired. Then similarly, for all these years, I can issue up till this period because if income escaping greater than rupees 50 lakh. For these years, I can absolutely issue because here 3 years is applicable. Are we clear? Yes or no, student? Yes or no? Yes, students, answer me. Yes. Okay. Yes or no? Faster, students. I need to know your answers. Are we clear with this particular point? Okay. Yes or no, students? Fine. So now, what is the expiry of the time limit? Now, once the notice is issued under 148, of course, the assessment will be made. And then finally, the year after this, what is the procedure? After this, a notice has to be issued under 143.2. Again, this is mandatory. This is mandatory because then from the reassessment, this will be treated like a normal assessment. So for any assessment, whether original or reassessment, 143.2 is mandatory. What is the time limit? 3 months from the end of financial year in which the return of income is furnished. Now here, whether you will take the original return of income, which is filed either under 139, 1, 3, 4, 5 or 8A, no. Here, this will be, because then the 3 months would have already expired. This return year means return of income filed in response to notice under section 148. Because from the original return, if you take these 3 months, this would have already expired. So here the return of income means the return filed in response to 140. So 3 months from that. And finally, again here, for calling out any information, notice under section 142.1 or for calling any information under 142.2 can be issued. For calling books of accounts under 142.1, for calling any other information, notice under 140 can be issued till the completion of assessment. Again here, the AO will have all the powers of special audit, valuation of inventory, which is there under section 142(2), or reference to valuation officer under 142A. So this will remain. And then finally, the AO will pass the order under section 143(3) read with section 147. So the order will always be passed either under 143(3) or under 144, where is a best judgment assessment. So here also the order will be passed under 143(3) read with 147. Now what is the time limit for this? Time limit is under section 153. Mansha, there is a need to issue notice under 143(2). There is a need to issue under 143(2) because this is mandated by the law itself. That you need to issue always wherever there is understatement of income, excessive losses claimed, or the lower taxes are paid. Then in that case, 143(2) needs to be issued for any assessment. Yes? Yes or no? Okay. So then what is the time limit under 153? What is the time limit which is provided under 153? So where the order of assessment is under 147, where the order of assessment is under 147, the time limit is 9 months. sorry, 12 months. The time limit is here, same, not here, sorry. Time limit is under 153C. This is 12 months. 12 months from, this is 12 months from the end of the financial year in which notice under 148 is served. Okay. So this is going to be 12 months. Are we clear? Yes or no? And where the reference is made to the transfer pricing officer, then it shall be 24 months. In transfer pricing cases, this will be 24 months. Okay. It shall be extended by another 12 months. Are we clear? Yes or no? Any doubt, students? Any question? Yes. Yes or no? Any doubts? Any questions? Okay, students? Yes? Any doubts? Any questions? Anything you want to ask? Fine. Now, one important section here that we are likely to discuss now is section 150. Now, let's understand this section with the help of an example. So, as per section 149, what is the time limit? No notice can be issued after the expiry of 3 years and 10 years in case the income escaping is more than rupees 50 lakhs. Now, let's say there is a company A. This company has given freebies to doctors, to medical practitioners. So obviously, this will be disallowed. Now, this is disallowed now under the section 37. But let's say this relates to AY 67. This relates to AY 67. This is disallowed from last 2-3 AYs, but this is relating to 67. Now, let's say this is disallowed by Supreme Court judgment because the AO had disallowed it. The matter reached to ICAI High Court and then Supreme Court. Supreme Court disallowed this particular expenditure. It said it upheld the order of the AO and said this expenditure should not be allowed to assist. Now the question arises, based on this Supreme Court judgment, can the AO reopen the assessment for company A for the prior years? So section 150 says that, section 150 subsection 1, it says that the restriction under time limit, the time limit under section 149, the restriction of time limit under 149 is not applicable, is not applicable where notice is issued. When notice is issued to give effect for reassessment to give effect to the finding or direction to give effect to finding or direction contained in the order passed by any court. So this particular section 150 subsection 1, because see the time limit is 3 years or 10 years. So let's say for example from 6-7, the AO could have gone back to maximum how many years? 10 years. The AO could have traveled back to maximum 10 years as per section 149. Isn't it? So 6-7, 10 years prior, 5-6, 4-5, 3-4, 2-3, right? 1-2, 2000, 2001. Then 99, 2000, 98, 99, 97, 98, and 96, 97. So it could have gone back to 96, 97. But section 150 subsection 1 is the exception to section 149 time limit. It says where a notice is issued to give effect to the finding or direction passed by any court, then in that case the time limit under 149 will not apply. So meaning the AO can reopen the assessment up till 70, 71 or when the Income Tax Act has come into effect, since the time company A is incorporated. Are we getting that? Now understand, let's say for example, there is a company B also, which has also given the freebies to medical practitioners. Now this has been upheld by Supreme Court in the case of A. Now B's AO, what he will try to do? He will follow the Supreme Court judgment. AO of B to follow Supreme Court ruling and disallow for B. Right? B has not gone into appeal. Appellant is A. So my appellant was A. But now B's AO can also reopen the assessment up till whatever time limit he wants to as per section 150 subsection 1. Isn't it? So that is possible because of 150 subsection 1. So AO of B can reopen assessment beyond the time limit under section 149. Are we clear? This is because of section 150. But then there is also a restriction. There is exception to 150 subsection 1. So 150 subsection 1 is an exception to 149 time limit. There is exception to or restriction to section 150 subsection 1. What is that restriction? It says that this particular relaxation, so relaxation under section 150 subsection 1 is not applicable where the reassessment relates to the AY, in respect of which the assessment could not have been made at the time the order which was subject matter of appeal, at the time the order which was the subject matter of appeal was made. On account of expiry of the time limit. On account of expiry of time limit. Now, what does this mean? So, section 151 relaxes the time limit under 149 in order to give effect to the finding of the court. However, such relaxation can only be used by the AO in cases where the time limit has not expired as on the date when the court's order is being passed. Not as on the date when the court's order is passed, sorry, as on the period for which the court order is passed. Are we getting that? So, what 150 subsection 2 says is that the order which is a subject matter of appeal, then in that particular case, this relaxation of 150 subsection 1 will not apply, where the assessment relates to the year. Let's say AY 70-71. In respect of which the assessment could not have been made at the time the order which was subject matter of appeal, which is AY 67, on account of the expiry of the time limit at that point of time itself. So it says the relaxation of 150 subsection 1 will not apply at the time the order which is a subject matter of appeal at that particular point of time if the time limit for the earlier AY has already expired. Are we clear? So if at that point of time the time limit has already expired, then in that particular case, the 150 subsection 1 cannot be used. Yes or no, students? So 150 subsection 1 and 150 subsection 2 are basically operating against each other. So if you look at it, what 150 subsection 1 is saying? What 150 subsection 1 is saying? 151 subsection 1 is clearly telling you that if case to give effect to the order of the Supreme Court, time limit under 149 will not be applicable. Time limit under 149 will not be applicable. Are we clear? And then 150 subsection 2 is saying that 151 will not apply where the time limit has already expired for that particular, on the date or on the for the year for which order is passed. As for that, up till that year, if the time limit for already has expired for the earlier years, then for those years the reassessment cannot be open. Yes? Any doubt? So at the time when the order is passed for AY 67, if the time limit for those years has already expired, then the reassessment for those years cannot be made. Are we clear? Yes or no? Yes or no, students? Any questions? Any doubt? Mancha, yes, they are very complex, even I understand, but you have to understand them logically. Court order related to the other assessee. Finish court order related to another assessee. Yes. Okay, students. So basically, 150 and 151 and 152, they are 151 is a restriction to relaxation to 149, and 150 subsection 2 is again a restriction to 150 subsection 1. Yes. So let's say, for example, for this 67, AY 67, the order has been passed by the Supreme Court in, let's say, this particular year, disallowing certain expenses which was being allowed to the assessee, let's say, right from 1971-72. Now, can assessing officer issue notice for reassessment right from 71-72? As per 150 subsection 1, notice could have been issued for assessment year 71-72. However, when limitation of 150 subsection 2 is applied, the provisions applicable as on the date the order is passed, the order which is subject matter of appeal is passed, the assessing officer cannot issue notices for 71-72. He can issue for a maximum period of 10 years. Let's say the order is passed in this particular case. Let's say order passed on, let's say, 10th November 2023. Now, for this, up till 10 years, he can pass the order. That is, let's say, 1314. Okay? He can pass the order maximum for 1314. Yes, he cannot go back. He cannot go back. Yes or no, students? Any questions? Any doubt? Yes, faster. So he cannot traverse back beyond this particular point. Okay? Yes or no? Are we clear? Yes, he cannot traverse back for company A. He cannot traverse back for the company A. Yes or no, students? Okay. So with this, Shankara, messages what people got for giving response under e-campaign will also be considered. No, that was not a notice. That was just an email which was sent. The time limit was given as till 31st of March, Shankara. Yes, for 97-98, it cannot be reopened, Thinesh. That's correct. You're right, Thinesh. For 97-98, it cannot be reopened. Yes. Okay. So with this, we'll close the class for today. And in the next class, we'll continue this particular topic. We are done with the reassessment. What we'll do in the next class, we are pending with the faceless assessment scheme. That is one topic. And then we are going to discuss about the search and the survey. And with that, we will be finishing off the next class. In the next class, the entire assessment procedure. And then we'll move on to, of course, the appeals and revision. Okay, students? Yes, 154 as well in the next class. We'll discuss that with the appeals and revision, Mansha. Thank you so much. See you in the next class. Yes. Good night.